One. My name is Mike Foster, the Entrepreneur's Mentor, and welcome to my latest A Zoom With interview. You may know that I share my video snippets to help you in the development of your business, but the Zoom With series is all about introducing you to my trusted network of experts who can help you also with the development of your business. And today they're going to share their tips and their thoughts with you. And I say they today because it's a little bit different to normal. I've got a round table of experts with me today. And I'd like to welcome and introduce Ian Roberts from Cashflow Creators, Tori Wag from Panthera Accounting, and Howard Feather from NatWest, who are all going to share their thoughts around a couple of questions that I've got, all related to the world of finance. So it's our Finance Roundtable, and I welcome you to join us. So welcome, guys. Thanks for joining us.
Hello, Mike.
Hi, Mike.
Hi there, Mike. Thanks for having us.
No, thank you, and thanks for spending some of your valuable time. Because I know, speaking to you all offline, how busy you are, sort of supporting your clients at the moment with obviously pandemic and lockdown in different ways, whether that's finding finance or just helping them stay alive. So really appreciate you spending some time. And my first question really is around, as we emerge from lockdown, what would be the one thing that you would recommend to business owners to focus upon? Tori, would you like to go first?
Yeah, sure. So what I'm talking to all my clients about at the moment is making sure that you have a plan. So we're talking about business recovery planning with our clients, and what I really mean by that is making sure that you take some learnings from what's happened so far, and that you're starting to plan out for the next maybe 6-12 months. It's a bit hard to see much further on than that, but really working out where the cash is coming from, what's going to be happening in your business, so that you can understand what sort of financing you really require in order to get through this period, which could throw up all sorts of different sorts of scenarios. So part of that planning is to look at what the scenarios could be, and maybe have 2 or 3 different plans depending on how you think we're going to start to come out of lockdown and what's going to happen in the economy for the rest of 2020.
Right, and I know you've had some real good engagement with your workshops and certainly the videos and content you've been sharing. So certainly recommend people to have a look at that. Howard, would you like to add to that?
Yeah, of course. I think one of the things that are really resonating with me and certainly my colleagues is, let's not look at this as a recovery, but look at it more as a relaunch. Some of the lessons that we've learned over the last 12 weeks, let's not rush back to the old normal, and actually think about what your new normal will be. What do you want your vision to be? But actually in that plan, review your old plan and see, actually, do I need that factor to be in there? Just because I've always done it doesn't mean that's always the right way. Looking a little bit more on the finance side, there are some amazing finance options and products out there across the whole market, whereas traditional lens maybe not as purpose built. So this is a great time to review what you're using and how you're using it. I would use this as an opportunity to relaunch your business and make yourself stronger.
And Howard, are you seeing more people then moving away from the traditional standard loan and overdrafts to other types of finance then, from what you're saying?
Absolutely. So I think there's some revolutionised lending products coming up into the market over the last 18 months. And they've been maybe a little bit slow to the uptake, but I think, and I'm sure Ian will back me up on this one in a second, they are much more purpose-built, and actually they fix specific problems, whereas the traditional lens, don't get me wrong, there is a time and a place for them, but actually I think reviewing what you're using and how you're using it can really help your cash flow.
Yeah. Certainly one of the recommendations that I would make to my clients is that they look into the options. They don't just go for the one thing that they think is the big highlight to go for, is look at what all the options are out there for the best finance to suit their business and to suit their circumstances. And as Howard says, I'm sure, Ian, you can expand on that or touch on your own thoughts, please.
Yeah, for sure. And I mean, I, in contrast to raising money all the time for people, I would actually say that one of the key things to come out of this is that people really need to take some education with their finances in terms of what they understand all their numbers mean, because getting all this stuff produced by your accountant, getting the bookkeeper to do stuff in bits and pieces, there's still a very wide gap with what people actually really understand the numbers to mean to them for their business. And I think if anybody misreads what's going on at the moment, they've got to be so agile certainly for the next 12 months minimum, and their business and their numbers and what they are committed to, either by personal guarantees or business warranties that they're doing, they need to be very agile with that, because it's going to be a little bit bumpy on the way out. And I just think people, which is the reverse to really what I should be marketing, I guess, here, is that I think people should take on as little funding as they need at the moment, because I see so much over gearing in business at the moment. It will bring them to business recovery situations, because I don't know if they'll be able to service that. So from my perspective, and it's being somebody who is very passionate about entrepreneurs making a serious business themselves, we are advising people in some cases that it would be wrong of us to actually get the funding for them, because it will actually kill them eventually in their businesses. So we have to be very straight about that. It's not very useful to me, because I don't get any income when I say that to people, but the beauty is that those people will come back at some point in the future, because, to be fair, it will save their businesses. But I like Howard, are also, make no bones, the banks can be some of the best deals, and make no mistakes there, that they still are a very good resource, and they still offer some fantastic rates. But as Howard says, when they can't lend, there are some superb alternative lenders in the marketplace, and we mustn't disguise that they are slightly higher rates than your general banking, but they do, as Howard said, are fit for a different purpose for that typical time. And one of those is insolvency funding. We've got a massive increase on people looking for insolvency funding, and that's to actually just restructure their businesses with, because general banks might not like to do that, and some of the other funders might like to do that. But to go all the way back to the original question, there is absolutely no question, I think, if businesses do not forecast for the next 12, 18, certainly 2 years in advance, and a year minimum, and actually have the P&L forecast and cash flow forecast, and absolutely understand it. Because I see lots of businesses that have had that done for them, but they don't fully understand it. And I understand that, the finance world and accounting world do talk a little bit of a different language from a normal business owner's perspective. And it's just one of those things. But I think if they understand it and they can actually implement that in their business and really understand what it's telling them, I think they'll survive this very nicely. But I also must labour the point, don't over-finance your businesses, because these bounce back loans and CBILS loans have been thrown at people, and they've got to service them soon. And that's what I would say.
Thanks, Ian. It's really refreshing to hear someone like yourself saying, don't borrow, don't borrow, over borrow. I see too often, just money being thrown at people when it's available like this. And like you say, if we can't service it, that's going to just bring long-term stress and anxious to people. So great. And I think, we probably all four of us, and probably the reason why I wanted to bring all four of us round one table was that we're all advocates of making sure people are planning and forecasting their business. So great to finish with that one. My second question that I'd like you all to sort of share your thoughts again around is that, what do you think is the most common mistake you see from people when they're actually applying for finance that might either stop them from getting the finance or make it just a long-winded process for them? So, Howard, do you want to give us your experience from a bank perspective?
Yeah, of course. So I think one of the major failings is it's never thought through. So the plan's not thought through enough. And that can come across as a couple of factors. So picking up on Ian's factor of borrowing too much, we actually also see quite a lot of the time the exact opposite, and people not borrowing enough. Now, there is a very fine balance there. But again, a great example of this is in the media at the moment with the bounce back loans, where it's been decided that you are only ever allowed to apply for one. So people who applied maybe 4 weeks ago when it first came out applied for 5,000, but actually if they spent a little bit more time thinking how much they needed, they're now coming back to lenders saying, can I have another 5? So it's that lack of thought, lack of planning, which is really, really key. But also, again, Ian's mentioned us in the finance, we do speak a different language. We like to see plans. We like to see what you're forecasting. show us what you mean. So when you're applying for any finance, regardless of what format, where it comes from, we want to know where it's going, how you're going to be spending it, and what you're spending your money on at the moment. We want to understand so that we can support you. So again, I think there's a sometimes you get unprepared applications where it's just, I want money, I don't want to talk about it. So that's the bit that would be my top tip.
A really interesting point about the right level of finance. I remember in my bank days, people coming, applying and then coming back, and just puts you uncertainty in terms of, well, do you not know your own business, what you needed in the first place? And it just puts that sort of doubt in your mind. So, Tori, I can see you nodding. Would you like to extend on that point, or add your own thoughts?
Yeah, I mean, I think Howard's absolutely spot on, and I think the times that we've had maybe the most anxious and difficult conversations with clients are the ones that have come to us saying, I've got to get the borrowing and I need it tomorrow. And you think, well, if we'd been doing the cash flow forecasting we've been talking about for the last 12 months, we'd know exactly what that point of time was going to be, and we would have been prepared in advance for it. So yeah, it's absolutely the planning up front. I think the point that I would like to make is about reading the small print. So I think I've seen people running at some, especially the bounce back loans, because they were, a few people I've heard describing it as they were being handed out like sweeties. And they were so easy for some people to get that they just ticked all the boxes and popped out there, and suddenly there's some money in their bank account without really digging down into how much is this going to cost me in 12 months time? Have I got a plan for where that's going to go? But also other lending products. So really understanding what it means when you sign a personal guarantee. What are you actually signing up to? And this kind of goes back to some of the bigger questions that we try to unwrap a little bit with our clients is, as a director of a limited company, what are my duties? What do I have to make sure I am doing correctly? And if I'm going to then sign a personal guarantee on a business loan, what am I putting at risk when that happens? So it's all really, I think the mistake I've been seeing is people not just stepping back for a moment, taking a breath, thinking about what they're signing up for, and making sure that when they're signing these finance agreements, they really understand what's sitting underneath that lending.
Right, another great tip and thought from that. Thank you. And Ian, would you like to think about the most common mistake you see?
Yeah, I think something that's very dear to my heart with lots of these owners, business owners like ourselves in the past, is that they're too busy doing the day job to actually understand the numbers in their business. And it's great to rely upon your accountant and your bookkeepers and all the others, but I find the people that really understand their business are the people that actually produce some of the numbers to the best of their ability in cash flow and forecast, and then give them to the accountant to actually make sure that they're rubber stamped and looked after. The other thing I see was a massive mistake is that, as you rightly say, Tori, people don't plan ahead. They don't plan a long-term business review of where they are. And a lot of them want to save tax, and I suspect that Tori will say the same. Nobody wants to pay corporation tax. They have low profits showing at company's house, and guess what? A funder wants to see profitability. So we're always locked in this rock and hard place. We'll say, well, my figures were better than that, and I go, well, but that's what you've registered at company's house. That's your legal document to say what the business has done. And so the funders or the underwriters are looking at it and think, well, not that good, is it? And I'm going to lend them money. So I do think that, as we're saying here, is that if there's not long-term planning on essential numbers and knowing where you are with them, and also taking a view is, do I want to not pay as much tax, but then trap myself by not getting funding or the wrong kind of funding at that point? And I think that's where these planning elements come into place. But there is no question that I think a business owner who may not like number work, and pretty much 90% of business owners don't like that side of it. They like to make the money to buy the sports cars and everything that goes with it. But the actual physical production and forecasting, and that isn't very hard, but it's nice to give it to somebody who actually really knows what they're talking about, like Laurie, like myself, like yourself, Mike. We can really look at those numbers and read something different into it, or pick up on stuff that might be missed. So I do generally see that people don't actually have the paperwork that they can offer their funders. I see people going, I went to our bank manager and he said no. And so I said, what did you offer them? And you look at what they've given them, well, nobody would give you the money. I don't even think a pawnbroker would have given them the money. So we have to be honest. And I do think there's such a lack of financial paperwork and financial clarity within their businesses, like you were saying, Mike and Howard and Tori. You've got to plan and get it right. And actually, one thing that's really important to businesses is longevity, is actually having number work in place, knowing the numbers, and actually transforming the business sufficient enough to go and get funding. If you don't plan, you're stuck with what you've got, and it's normally not enough financial data or profitability or whatever it is. But one thing I will say, just sorry to go on a little bit, but one last thing I will say is, and I know Howard and Tori will see exactly the same, people are looking for funding, but their business is already currently overgeared anyway. Your funding circles, your IWOCAs of the world are throwing money at these people like they're sweets. And I'll be honest with you, I won't deal with the IWOCA type funding, to be fair. I don't think businesses can sustain it long term. And I think it's very difficult. So I see people already borrowing money from low-hanging fruit lenders and then trying to go to a better lender, get more money and try and replace the old funding with some better funding. So that it's a terrible mistake, because the funders, the good funders, if you like, or the ones that are more aligned to giving you good rates that will help your business rather than kill them with high rates. They've overgeared their business, and it's a very difficult thing to swap out. And right now, certainly over the next 12 months, I think it's going to be even more difficult, because they've got IWOCA loans, funding circle loans, and they've also got bounce back loans. So the businesses are really, really overgeared a little bit at the moment, and it's a shame. So I do see that as a mistake as well.
Thanks, Ian. And again, it's the language that the lenders are using, like that in terms of gearing, etc. That, in my opinion, quite a lot of us sort of business owners don't necessarily understand, and that's where we can play the role in terms of supporting that. But again, I think the lenders have that responsibility, and I know Howard does a great job in terms of explaining this, in terms of what that actually means, in terms of what the impact for the business means and what they need to report. That's such great. So really appreciate your thoughts around that. Is there any sort of final thoughts anybody would like to add around any of those couple of questions?
I think for me, Mike, the only thing I'd like to say, if you've got a very good accountant like Tori and stuff like that, whatever you do, you've got to actually plan ahead with your number work and get that support. Planning and being agile is going to save you all the way. And I just can't emphasize how much financial planning and getting forecasts into place is going to be the right thing. And when you've got a very good, knowledgeable accountant on it, that's spot on, really.
Fantastic. Tori, Howard, any last comment?
If I can take the moment, Mike, just to let people know that on the 18th of June, we're running a free webinar about business recovery planning, not in the insolvency technical term recovery like that, but talking about how you do make that plan going forward, so that you can really make the most of the opportunities that are coming. And if people want to join us, that's 4 o'clock. You can find it on my socials under Tori Wag or Panthera Accounting, and it'd be really good to get some of those people out there who, just like Ian was saying, need to get a little bit more financial education. There's loads of free education coming out from these wonderful sort of Zoom talks that Mike's doing. Lots of accountants giving away a lot of value for free at the moment. So really make the most of that. As a business owner, you're probably not going to get an opportunity to get this much free advice again, and it's coming from good quality sources. So jump on those things that are available to you.
Right, certainly, Tori, and certainly recommend it if you're not hooked up with Tori's social feed, just to catch up with some of her videos that she's been sharing throughout this whole pandemic lockdown, which has been really helpful and supportive. And Howard, any last thought from yourself?
Yeah, I think to kind of put that last nail in the coffin about planning, be open with your coach, your mentor, your accountant, and your lender. The more information you give them about what your long-term plan is, the more advice we can all give you. I think there's that old adage, the better your accountant is, the better your lender has to be. But actually, if we all know what the end goal is, we can make the numbers work, and we will work with you in planning for your future. So again, that plan for me is, I think I've said it far too many times, but that's the real key point, and let everyone know what you're doing, because we can then all work together.
Superb. And Howard, how does someone contact you if they need to speak to you?
LinkedIn or my phone on 07586 492 686.
Cool. And Ian, what about yourself? How would someone get hold of you if they need to speak to you?
As behind me, it says cashflowcreators.co.uk. You can look me up mainly on LinkedIn's the best way to do that, or you can ring me on my mobile 07 880 355562. But Cashflow Creators on LinkedIn is ideal, and I will look after you. Thank you.
Brilliant. And Tori, you've given us a link for the webinar, but what about any other contact details?
Yeah, best way is LinkedIn for me too, please. Pop me a direct message. That's the best way.
Fantastic. Thank you very much. So thank you all. Thank you for spending some valuable time with us. I know, like I said earlier, how busy you are all, and also how supportive you have been. I know people in my network who use your services and how complimentary they are of you. So thank you for spending some time with me around this round table to sort of share your thoughts around those two key questions that I wanted to ask for you. So I will see you very soon on this circuit, no doubt.
Thanks, Mike.
Cheers, Mike. Thank you.
So thanks, everybody. Thanks again for watching this latest Zoom with video. Please subscribe to my YouTube channel, and then you'll get an automatic response next time I launch a Zoom with whoever's next.